Welcome to Quantum Finance. My name is Parker. I am the head trader here, but I am not a financial advisor, and this is not financial advice. So, in today's video, we're going to look at the economic data, do an overall market recap, and then look at the trading opportunities that presented themselves today. And then we'll look at some tweets and end the video off by looking at what we have to look forward to next week on the economic data front. So today we had the US ISM non-manufacturing PMI index come in better than expected. So now we'll turn to the market overview. Starting here in the debt market, we have the 10-year yield. As you can see, big red day after, 3 green days in a row, getting rejected off that upper standard deviation, getting a large wick here on the 1 week chart. Looking to the dollar, we have a red day here in the dollar. Just kind of been chopping around in this range between this upper band and this 20 EMA on the daily, getting rejected up here still at this midline around that 105 level. Stock market, absolutely huge day in the stock market. We had a nice gap up and then we just melted faces all day today. Getting back above that weekly 20 EMA level. Also getting through that weekly daily level. Bitcoin. So Bitcoin made some noise today with a big red day, currently down 5%. Coming down to this lower band and this previous support down here, getting close back to that 20 weekly moving average. We can actually look a little more into this trade here. So we'll go down to the 6-hour chart and we'll take these indicators off. And as you can see here, what we have is a bear flag rejection off of this previous support line. This previous support did turn into resistance. And then we just got a bear flag breakdown to the lower end of this range. So now we'll look at commodities. Commodities, starting with oil here, just absolutely huge day for oil as well, getting through that downtrend line, coming up to retest this previous high right here and this upper band, starting this month off nice and green. Gold, strong day for gold as well, getting through that daily 20 and a nice start to the month. Pretty much, just 5 green days in a row. This obviously wasn't green, but wasn't really, much selling at all either. So just really strong week overall for gold. Silver, nice green day for silver here as well. Still has a lot of room to go before we're back at the middle of this range, but still fairly bearish on the monthly being below the midline there. So now we'll turn to the trades for today. Yeah, we'll start here with the S&P 500 on the 15-minute. So as you can see, just absolutely just ripped all day today. These are the kind of days that traders love the most. It was almost hard to lose money today. You had to try to lose money. This is one of those days where you could almost buy anything and make money. This is just one of those days that makes trading really, really exciting. And so what you can see happen here is yesterday we did get that nice rip after lunchtime into the close, bouncing off that 200-day moving average, getting through the 50. And today we just gapped up in just a whole lot of buying today. You can look up here at this 2-hour chart. As you can see, we just came down, bounced off that 200, broke the downtrend that we were in, and just melted up. So we're going to look at the scanners here, see what trading we had today. And this is the 5-minute on the SPY, as you can see, just pretty much straight up all day today. So we'll start here with the Gap Vault scanner. Looking at this upper chart here, as you can see, Tesla just ripping forward, nice rip, consolidation, AI, Apple, GNS. I mean, as you can see on the scanner, it was just a lot of green today, a lot of big green candles. But we're going to go over the best trades for the day. I know I said before in a previous video that if Tesla is at the top of the board, there's really no reason to focus on anything else. But there is something that beats out Tesla, and that is Apple. Because Apple is the largest stock in the entire stock market. So if you see Apple on the board, especially near the top, that's definitely what you want to focus on. So today in Apple, you can see it just ripped up here off the open, got a nice consolidation, a squeeze. We didn't really get the MACD cross until way later, but you know, this was still a really nice trade that you could have got in here. So with our strategy, we look for a squeeze with positive momentum, a MACD cross, and then a trade line VWAP crossover on the 15-minute. We had the squeeze. We did not have the MACD. We almost did. We didn't get the MACD until later, but we can zoom out here on the 15-minute. As you can see here, we get the trade line VWAP crossover to go with our squeeze. So yeah, this was a really nice trade today. You could have entered in, you know, here when you get the positive momentum squeeze to the upside, along with that 15-minute cross coming in. So this would have been a good entry here. Yeah, you really didn't have any squeezes. So this, in this area right in here, would have been your best entry for the day, risking down to here. So this was just a great trade today. Let me show you these options we had. So I went with the 150 strike options. And 150, as you can see, is right here. So right here, you were entering in right here or right here. This is actually where I entered in. I got in a little early just because I was really excited for today. I knew we were going to be extremely strong. But if you were more disciplined than I was and you actually waited for, you know, more momentum to the upside, this would have been a really good entry here. And then as you can see here on these put or call contracts right here, they were sitting at about, we'll go to the upper side, we'll call it 31 cents. And as you can see this move here, I mean, we're talking on the upper range 200%. We're talking over double your money on investment here with these contracts. These are really just an amazing trade. I mean, you see Apple on top of the board, you gotta be on that. So we're gonna zoom back out so you can see more of what was happening here on Apple. So one of the reasons I bought in early before the momentum actually shifted was because we get the VWAP and this previous high from, you can look over here at the 30-minute, from Thursday, we're lining up at the exact same spot. So you had a trade line VWAP cross with the squeeze right on top of a previous high. I mean, that is a lot of support lining up in one spot, along with just an extremely strong market. What wasn't ideal was these bands. This is why it took so long before it really got the move we were looking for, was because these 1 hour came in here and we just needed to give it time for this 1 hour to expand up. And we'll look at the daily chart. Yeah, you can see just monster day on the daily, breaking this downtrend after bouncing off this lower band here. And Apple's looking extremely strong here on the monthly too. This is a nice spot if Apple can start, you know, breaking to the upside here. There could be a lot of upside in the future for Apple here. So definitely one to watch. So yeah, there was that Apple trade. We took these 150 call contracts. And another good trade today that we had was Amazon. So Amazon, I mean, if you see the FANG stops in here, I mean, Apple's the #1 stock in the stock market when it comes to market cap, and Amazon, I'm pretty sure, is like 4 or 5 or something. So these are top 5 stocks. If you see these on your scanner, I mean, you got a hard focus on those. So Amazon, here we had the same thing. We had the nice push up. We get the nice squeeze in here with the momentum to the upside, and would have been a great entry point right here. You had momentum to the upside. You had the MACD curling up, but as you see, same with Apple. We didn't get that MACD cross till back here, which was right before we made that move up. But this would have been a really nice entry here on Amazon after this nice squeeze came in. We had the momentum to the upside, and we'll look at the 15-minute chart. As you can see, we had the 15-minute crossover right here. So that's what we look for in the trade. We look for the squeeze with momentum, and we look for the trade line VWAP crossover. We do also look for a MACD cross, but the MACD is a lot slower indicator than, say for example the stock RSI. So I mean, you don't have to have everything line up perfectly on a trade, but you are gonna need the majority of your indicators or the things you look for, your playbook, to be there in order for a trade to work out. So another reason I went with Apple instead of like Amazon as the number one trade, as the first trade I took, is because Apple or Amazon was below this 50-day. So I did think this would act as some resistance, but overall I did think it would, get through it just because of how strong everything in the market was. So this was also just an amazing trade we had. As you can see, getting in here, there was plenty of room to the upside on the 15-minute bands, on the 30-minute, on the 1 hour, there was plenty of room to the upside, and on the 2 hour. And we can look at the daily chart. As you can see, just gapping up after bouncing off this lower band with plenty of room to that daily 20 there. So we can pull up the contracts on these that we were looking for. So actually on these, we went with in the money contracts. We were looking at, hold on, what were we looking at? Where were we at? Yeah, we got these 94 strike contracts. So I'm going to send these over so you can see exactly what was going on. So here we have these 94 strike calls. Assuming your entry was right in here when we got the first nice squeeze with a positive momentum. As you can see on the chart, these were at about 42 cents. And up to the highs, we're looking at a 90% move. And at the height, a 110% move. So these contracts also had a major move. Obviously, those Apple contracts were better. In hindsight, going up over 200%, that's a major bag alert, but 100%, no one's complaining about that either. But something I really did want to note on these contracts here, something that I think is very important when it does come to day trading options, especially when you're trading contracts on the day of expiration. So today is March 3rd, and these contracts expire today. So as you can see, the stock was in the money, and everything that was out of the money is just worthless, right? So when you're trading contracts that expire that day, there's going to be increased risk, right? You have time decay, which will affect the price of your contracts. So say this was your entry right here at 1245 area. We're going to look over here at the contracts. So say you're buying these contracts at 42 cents. Your stop loss would be down here, right? At around this 11 o'clock low on the price chart. That would want to be your stop loss. So we'll call that like 30 cents. But as you see here, it didn't go right away. It took a while. As you see on the price chart, the price stayed higher. The price didn't even come near these lows. But on the options contracts, the options actually came down below that due to the time decay of the option. So you have to think about that when you're analyzing the risk on a trade. So especially if you're trading it on the day of, you're going to want to add some increased risk, right? So instead of putting your stop loss right here at 30 cents, you could move it down to maybe like 25 or 20. You just want to give yourself plenty of time, especially if you're really confident in the trade. You want to give yourself plenty of time for the trade to play out, right? Because this was your entry here at 1240, but you really didn't get your move until 2 o'clock. So you would have been in this a while, and that's a lot of time decay to eat away. So you want to make sure to take that into account when day trading these contracts that expire on that day. So make sure to add a little bit more cushion for your risk so you don't get stopped out purely because of time decay, right? So yeah, that was pretty much the main two trades. I mean, there was a lot of trades today. I mean, there's a lot of squeezes, but as I said, if you have two of the top five stocks, I mean, that's all you need, right? That's all you need. Apple would have really done it for you today. That did it for me, and Amazon would have done it for you too. So yeah, those were the two really good trades we had today, and yeah, so we'll finish that up and we'll go look at some tweets that I saw. So here we have 20 years of the National Home Price Index. So as you can see, home price is really pulling back here with the highs coming up here, and I'm pretty sure that was June. And then here we have 90% of companies have reported earnings, and the earnings are down 28% year over year, the third straight quarter of negative year over year growth, and the largest decline since the second quarter of 2020. And this is the Federal Reserve's balance sheet hitting its lowest levels since August of 2021, down $626 billion from its peak. And here we have only 1 in 5 U.S. homes for sale in 2020 were considered affordable. Affordable meaning a mortgage payment is less than 30% of the median income in that area. And here, I'm not sure if a lot of you follow this, but I'm obsessive over this case. We have a update in the Ripple Labs versus SEC case. We have Ripple filing a letter regarding the recent Supreme Court case that supports Ripple's fair notice defense. So yeah, we're hoping for the best for this lawsuit, man. We really are. And we'll finish this up by looking at what we have coming up next week. So Monday, looks like we don't have any really important economic data coming out, but Tuesday, March 7th is going to be a big one. This is going to be one we're going to want to look for because we have the chairman of the Federal Reserve testifying in front of Congress. So yeah, everybody, you definitely need to be watching out for that. That will be really interesting. So that'll do it for today's video. Appreciate y'all watching, and I will talk to y'all later.